All right, it's Friday, May 16th. Options expiration day today, and Max Payne had no effect on the market. In fact, the market went the opposite of what Max Payne usually says, but that can happen, and Max Payne is not a guarantee by any means. It's just meant to give potential future direction. So let's take a look. Lots of things happening. We're getting close to 6,000. S&P ended today at 59.58. So maybe Monday we'll hit it, but that breakthrough I think is imminent. In fact, I think the market wants to get to 6,000. And then we'll see if it can make it back to the old all-time highs before the end of May. So as always, I am not a financial advisor, so all this is for educational purposes only, and past performance does not guarantee future results. Let's take a look at what happened in the market today. The market bias matrix ticked up slightly, so it's kind of slowed down the momentum, but there's not too many more to turn bullish, actually. So that should be expected. So the next ones are going to be the long-term ones to turn bullish. And right now, we are in a very bullish stance. Let's take a look at the S&P first. There we are, another great day today. And as you can see, we're heading, this is the 6,000 level right up here. We're heading very rapidly towards that. 59.58 was the close. This was the previous resistance. It's blown through all the resistance levels. Made it through the 21 and the 5-day back here. Made it through the 50-day right here. Made it through the 200-day Monday. Now we're way up here. And the 50 now is curving up. We have a death cross still over here, but it really doesn't have much effect. I did a whole session on the death cross. You can take a look at that. I think it was a technical Tuesday, probably 4 weeks ago. Basically right when this happened. So whatever that was, middle of April. And I said at the time that whenever there's a death cross, all of the media loves to talk about it, but it typically means that we've already hit the bottom and we're probably starting to come back off of it. So what does that mean when we hit a golden cross? Does that mean we'll be at a top and getting ready to go down? Well, maybe. We shall see when that happens. But right now, everything is very bullish. There's no reason to short the market at this point, unless you're following all the doomers, which you probably would have shorted way down here if you were doing that and be way underwater. Here's the NASDAQ 100, same thing, has a nice hammer candle today. So probably will continue. Everything ended near the highs of the day, so the market will likely continue to go higher on Monday. As we get towards the end of May, Russell 2000, let's take a look and see what that's looking the same. Today broke through that resistance level. It hit it and pulled back a little bit and then broke through today. Actually, two resistance levels, broke through the downtrend line and broke through the horizontal resistance from over here in March. Now it needs to get through the 200-day, but this one also looks like it's in a very bullish configuration, continuing to go higher. None of these are at the 70 level here for the RSI, which basically would be the overbought territory. Actually, NASDAQ 100 is overbought. So we have to start thinking about, when this is going to potentially hit that resistance and go sideways or come down. But you can see that it can stay up there for quite a while, but we've just hit it on the NASDAQ 100, and the S&P is just below it, barely touching it right here. So the S&P is starting to get to that overbought area, which frankly is right on time. If we look at the from Stock Traders Almanac, the historical view of what's typically happened back to 2004. So 21 years for all years, and for post-election years back to 1950. So that's about 18 years. And you can see where we are right now, options expiration. For all years, there's a consolidation, pull back, and then take off again. But for post-election years, we have already started the the rally, which is apparent on the chart, and that looks like it should continue until the end of May. So we've got 2 more weeks until this rally may come to an end when we get into June, probably towards the end of the first week when we have the jobs number, which I think may come in weaker than expected, but we'll see. We'll talk about that when we get closer to it. Notice right here that next Friday is the 23rd, and then 24th, 25th, and then Monday, the 26th is Memorial Day. So we've got a shortened week after next. So we basically got 9 more trading days left until we get to June. How about the comparison with 2018? Well, still tracking, still looking similar to 2018, still going up. 2018 went back to the all-time highs. We look like we're headed back there as well, with 6,000 being the next level, where we'll probably consolidate or pull back a little bit when we hit 6,000, a nice round number. But we've only got 40 points to go on the S&P, 41 and change on the S&P. So could easily hit that Monday or Tuesday of next week. And then we'll see what happens. So that's where we are so far. Let's go back and take a look at the dashboard right here. So dashboard, you can see equities climbed higher today, up 330 points. You notice the VIX now is just slightly above 17. It pulled back again as well. NASDAQ 100 was up today. Everything was very bullish. Bonds, 30-year pullback, 10-year pullback slightly, 20-year actually went up and then came back down pretty much flat. And the dollar was higher today as well. And commodities, gold, big pullback on gold. I think gold has topped. I think it hit a double top, and I think it's going to pull back for the foreseeable future. Again, regardless of what the doomers say. It's right there sitting right on the 50-day moving average. It's a very critical support level right now. I think it probably, as you can see, momentum is continuing to go lower. It's not below zero, but it's getting close to that, which would confirm a bear market. So it is continuing to go lower, and I think that will continue as well. So gold looks like it's continuing to go down. All right, let's get back to the let's go look at crypto. Bitcoin right now, Bitcoin is pulled back a little bit, still going down a little below 104. As I mentioned before, the key level for Bitcoin is 106, and I expected it to consolidate. Basically touched it almost exactly right there. Now we're consolidating sideways. We're right at the uptrend line. So this is the point where it may take off and break through 106, or it could decline. This one also by the end of May, so it's got 9 more trading days. It might just continue sideways, or it might just blow through 106. If it closes above 106, that'll be the first time ever that it's done that, except maybe back there. Let me take a look at that. This one right here, December, it closed at 106.089, so just barely closing above 106. Closed the next day above 106 as well, and then close above 106 on January 21st. But all these are just barely, 106, 106.089, 106, 140, 106, 155, and that was it. Those 3 were it. So it needs to break through 106 and close probably above 106, 200 and stay there. That's the key. It needs to stay up there. And then if it does, then probably there's more rally ahead. So we'll continue to watch that. You can see it also is overbought considerably. So the RSI is above 70 and starting to pull back right now. So we'll see. We'll have to watch that and see if it does pull back. So that's Bitcoin. Let's go back and look at, let's see, what else on here do I want to show you? I do want to get to some stocks that people have asked about. So that will be important. Bias The market bias matrix actually got a green light here today on the short term. So the short term ticked back up again. Everything else is kind of flat. So nothing too exciting to talk about over here. We can look at gold. You can see what I see every day when I do these. Gold continuing to go down. So had a little rally there right at the end of the day, but it still closed below yesterday's open, I should say. So it's continuing to go down. Let's take a look at on the charts page. We'll look at the 10-minute charts for today, since we're at the end of the week. We'll see what they did. This will give you a full week view. So there's the week, very bullish, looks great for the S&P. This is the previous Monday was way down here. So definitely the last 2 weeks have been great. Technology, you can see for this week, technology went up. It did come back down. This is versus the S&P. So it did underperform. It's still outperforming the S&P because it's above zero. But it put in a little bit of weakness just slightly today. Financials kind of flat, actually weaker for the week. Discretionary, pretty much flat. Communication services, this is the same kind of thing with technology, pretty much flat for the week. And industrials has been the strongest sector. So it's continuing to go higher. If we look at the defensive sectors, they are healthcare ticked up slightly, staples up slightly or flat, energy pretty much flat, utilities flat or slightly up, materials slightly up. So what you can see for today, for the whole week, is a pretty clear picture. And the market is higher for the week. But just for today, the aggressive sectors are slightly weaker. The defensive sectors are slightly stronger, but I don't think that really is telling us much about direction until we get into next week. And I think the rest of the month, I think May is still going to shoot for that 6,000 by the end of the month. And finally, this also tells the same kind of story. This is growth versus value, down slightly, but pretty much flat. Discretionary versus staples. Staples actually had a nice run today, moving up. Technology versus the S&P, pretty much flat. Semis versus the NDX, flat. And internet versus communication services. So all of these are flat. These are the ones that tell you whether Wall Street is rotating into growth and out of defensive areas, which they have been doing all week. And now it looks like they've just sort of taken a break. They're not rotating back to defensive, but they're not adding to the aggressive ones, at least not yet. We'll see what happens next week. But nothing in here is of a major concern as we head into next week. So we'll see what happens. All right, let's take a look at a couple of things. First, I want to take a look at let's look at this. And first, I want to look at MU. We talked about this earlier. I want to show you something here. So this is Micron. Micron had a nice run, pulled back basically right to the 5 and right to the 200-day, and then took off again today. So it's still looking really strong, especially on the weekly. The weekly had a squeeze, and now the squeeze is firing to the upside. So Micron may still have a pretty good run left in it. But I want to show you something here, how you can use the scans in stock charts. So this right here, where it closed above the 21, as you've heard me mention many times, that's the point where I like to, that's a good entry point for a lot of stocks, especially if it's in the top 10 list or if it's ones that you've been watching, Magnificent Seven, whatever watch list you use. When it closes above the 21, like it does right here, especially when it's moving up, especially when momentum is going higher. So this is the squeeze momentum down here, and this is the MACD line, basically. So the MACD line crossed basically 1 day later, and the ADX line crossed 2 days later. Actually, the ADX line crossed right at when it went above the 21-day, and the MACD crossed the day before. So all of those things are confirming this cross of the MACD. So let's count backwards. So here's today. So let's go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, right there. So 16 days ago, would this have hit my scan, my optionable stocks scan that I like to run every day, and I'll run it again today? Would Micron have been on that scan? Would that have been a good time to jump in? And this is one of the reasons I'm going to start running the scan every day as well. So what you can see here is what I've done is it allows you to put in the number of trading days before the last update. So the last update was today. So we're going to go back 16 days, just like I counted, and run this particular scan right here. And let's see what it gives me. So when I say run scan, there's the scan. There's 101 names on this. Look at that. The NASDAQ 100 is on here. The S&P 500 is on here, and S&P 100. So the indexes themselves had that same configuration, closing above the 21. So that's telling you that the whole market is going higher. There's 101 stocks on this. This is very rare. There's usually not that many. Apple is on there. AMD is on there. Amazon, Arista Networks. These are all the top 10s. Carnival, Salesforce is on there. Datadog, Disney, Google. So we're looking for Micron. There's Intel. There's the Russell 2000 is on there. What else do we have? MongoDB, Microsoft. There it is. Micron right there. That hit the scan on that particular day, the same day that the chart showed that it closed above the 21-day moving average. So that just confirms that this scan that I run, that I'm going to start running every day just to see what's on it, doesn't mean that there will be something interesting every day. And we actually want to find them when the market's coming off of a bottom. That's the best time. We will get them when it's already going up, but sometimes the run may be close to being over when that happens. So let's take a look at the scan. And this, let's see, let's look at the scan for optionable stocks, bullish configuration. See what we get. So here's what we have for today. We'll look at each of these, not too many. It's only 6 today. Beyond Meat. Beyond Meat, by the way, so this is coming off of a bottom, real serious bottom. You can see the weekly chart over here. Just can't get above its moving averages. By the way, Beyond Meat is on the short chart list. It's on the short squeeze list. And the short squeeze list, I actually run that from a scan from Schwab itself. So I do that every week and update it. It's right on, for those that are interested, those that have subscriptions, on the chart list and scans page down on the left-hand side. These are the short squeeze candidates. So you can download the CSV into your own platform and run your own scans with it, or just watch them. So last week there were 44 stocks on this. And Beyond Meat has been on the short squeeze scan list for quite a long time. So that's on there for today. Gilead Sciences. This is a healthcare stock. So healthcare reports in August. Biotech sitting right at the 21-day right now. So I can't guarantee that it's going to continue to go higher, but you can see it's coming off of a squeeze back here, and all of the momentum indicators are moving up. This is still early in the cycle. On the weekly over here, you can see momentum's coming down, but it's starting to turn back up too. So this could be risky, but it certainly gives you some opportunities to look at. Here's Schlumberger. This is a oil equipment and services stock. They don't report until July, coming off of a squeeze. So this squeeze has now fired. So this one might be a good one to take a look at. Here's AT&T. Now this one is a strong stock. This one was also in the top 10 list. So it doesn't look the same. Doesn't look the same as some of these others, like Beyond Meat. This was not in the top 10 list because it's just been selling off. It was in the short squeeze list, but AT&T was in the top 10 list. So you can see how the difference in what the charts look like. Ones that are in the top 10 list just have a nice smooth upward momentum. And this is just coming off a squeeze right now at a really nice day today. Could break out up here when it gets above 28. And even the weekly chart looks pretty good. So that one's interesting. Teladoc Health. This one has been selling off. So this is coming off a bottom. It's got a higher high, so it's a character change. It has a bullish whatever you call it. I'll think of it in a minute. Anyway, this one looks good too. It's moving up. It's coming off a squeeze as well, but it's still got the moving averages to get through. And then Tilray for marijuana stocks, and it had a great day today. Tilray might be on the short squeeze list as well, so this one might end up being a short squeeze. It is in a John Carter squeeze right down here. Divergence, that's what I was trying to say. So Teladoc has a bullish divergence. You can see it as it hit new lows right here, the momentum was higher. So that is a bullish divergence. That's always a good thing to notice. But those that are looking for marijuana stocks, this one right here looks like it's only a 50-cent stock. So if you're willing to play those, then that one's kind of interesting. So let's go look at this other scan that I have in here. He basically uses the top 10 list. So it's a little bit different of a scan. We do have Gilead on here as well. So Gilead was in the top 10 list, and AT&T is on here again as well. But then we also have Molina Health, which was in the top 10 previously. So it's starting to make a comeback. And this one here, Option Care, I noticed this in the top 10 quite a bit back here, and then it fell out when it started to roll over, but it's starting to come back now. And it is in a John Carter squeeze down here too. In fact, it's been in one for quite a while. So there's some interesting candidates that you can take a look at and see what you think. While I'm here, let me look at a couple that folks have asked me about. I'm going to start with Marvell. Marvell is coming off a bottom. It's got a character change, so it's got two higher lows, and it's got two higher highs now. And it's above most of its moving averages except the 200. So it's starting to move up nicely. Same group semiconductors with Micron. And also you can also notice over here on the weekly, the longer term chart, the momentum is just beginning to curve up. So this one might be just in the early stages of a run. So this up here is how it does versus its peers, and it's definitely underperforming its peers in semiconductors. This one is how it's doing versus the S&P, definitely underperforming the S&P. And on the weekly chart, it's how the sector that it's in is doing versus the S&P. And technology is now outperforming the S&P on a weekly basis. So that's what Marvell looks like. It looks like it's maybe getting ready to run higher, but it's got a lot of work to do still. While I'm happen to be here, this is not one that folks asked me to look at, but oops, I meant NVIDIA. NVIDIA reports the week after next, and NVIDIA usually runs up into earnings, which is doing very nicely right now. Right back here, it would have been on, actually a couple of times it would have hit the scan. So right there it would have hit, right there, and right there, and then again right here. So you would have had to make a decision on how everything else looked. Things actually looked pretty good when it hit right here. So you would have had to, sit through this downtrend before it started to come back up again. Then it hit the scan again right here, and then just took off. So this is NVIDIA, the one really that leads the semiconductor group. So that includes Marvell and Micron. Another one that someone asked me to look at is LabD. This is a biotech. Interesting. So biotech on the daily chart is definitely rolling over. Momentum is trying to move higher, but the chart is not looking that great. So it's sitting right, reversion to the mean right in the middle right here. Biotechs are outperforming. This is biotech bear. So this is the 3x. So this is a leveraged inverse biotech stock, ETF, I should say. So what that means is if this is going down, that means biotech is going up. I'm going to actually look at biotech here in a minute. On the weekly, so this basically means you are betting on biotech declining. If biotech goes down, then this will go up. So let's look at biotech using the XBI ETF for biotechs. It should be going up, and it is. So biotech is starting to make a move higher. You'll notice that this one is right at where it would be above the 21. Could be actually today, could be right just slightly above the 21. Still needs to get above the 50, but it looks like biotech is starting to make a move. The ADX line is getting ready to cross. We'll see if that happens. It's been going down for quite a while. So because it's been going down, the Lab D would have been a great one to be in through this whole period here, starting from November. This is the weekly chart, starting from November. So let's go back to LABD and look at November. Didn't really do much. Back here in November, it did move higher. So it moved higher from about $5 up to $13. So that actually was a good run, about $12 there. So more than a double during that period when biotech was dropping, was going down. But now biotech looks like it's recovering. So LABD may be continuing down. Everything in the chart looks like it's going to continue to go lower. All right, what else? I want to just mention MRX I talked about yesterday. By the way, I said, and it's one that Tom Bowley talked about, saying that their earnings were coming up and that they may sell off on the news, and it might be a good opportunity to jump in. And it certainly was if you had jumped in right at that bottom. I'll put it up here. And so this one right here was earnings yesterday. So you can see it sold off heavily all the way down. If you jumped in around 42, then it went back up to 47 by the end of the day. So $5 you could have made. So about a 10% gain in one day. It's continuing to go lower now. So that might have been short covering, mostly it's short covering in there. And now it looks like it's heading lower. So, but it would have been a good day if you had done that with MRX. Now, MRX, by the way, for those that are subscribers and look at this every week, which I recommend for subscribers to do that, you'll notice up here the top three in each sector. MRX is right here. So it's in the financials sector. And of all of the stocks in financials, these were the top three. And if it has an asterisk, that means it was brand new for last week, which means MRX was in here for at least 2 weeks in the top three stocks in financials. Because it's colored red, it also means it was in the top 10 lists. So we can go over here and find it over here as well. And there it is in the IBD 50. IBD top 10, I should say. So MRX was also in the IBD group. So that's, both of those things show you that it's been a very strong performer. It was not in the other two, and it was not in the smaller mid caps down here, but it certainly was in the top 10. So it was on the top 10 list as well. That's another reason that that strategy that Tom Bowley laid out would have been a good one. And it was on his top list as well. That's why he knew about it. That's why he picked it. But just looking for the ones here in the top sectors, the top three in each sector can really give you some really good names to check out. All of these, by the way, are captured in this CSV file. So even the ones that have been on it previously, I I do a filter on all of those every week. Anything that drops out, like up here, anything that drops out up here. See, Palantir's dropped out in two of the lists, still in the IBD 50, but those all go into the CSV file. So that's basically what I use for when I run the daily scan over here. When I do this daily scan that I've got right here, this is that list. This is that CSV file. You won't get good ones every day, but if you get some that are in this list and in the list with options, then that's kind of a cross reference that you can use. So you can see all the ones that are in that list tonight. All right, the last one I want to look at, and a few people have asked me about this, United Healthcare. United Healthcare has had a terrible time. They they sold off on earnings. Earnings are right here, big, huge gap down on earnings. And then they have a investigation for Medicare fraud going on, which sent them down again. I think that might have been announced this week, or maybe early this week. So it's just continuing to go down. But look what happened yesterday on huge volume. Yesterday, you can just barely see. You can see it better over here. So these are regular candles. In this one over here, these are the bars that basically show you the open and the close. So you can see it better here. So it opened, it went way down. So it opened right here at 275, went all the way down to 250. So 25 points. And then in the same day, it came all the way back up again. So that's showing you that that really could be the bottom. That, people on Wall Street know that this is a solid company, that they're not going out of business, and they will come back. So this is the kind of thing that Warren Buffett likes to do. He did it with American Express years ago when they had some issues, and their stock went down significantly, and Warren Buffett jumped in. This is the kind of value play that Warren Buffett likes to find. Now, having said that, does that mean it can't go lower? No, it could go lower. It looks like it's getting a short-term bounce, but a lot of this, both yesterday and today, could be short covering. It could also be value investors looking for good opportunities, jumping in as well as shorts covering. So all of that may be contributing to the bounce today. Now, because of this, I did jump into this today. I will be putting a stop in it probably down here below today's low, and we'll see what happens. Preferably, it'd be nice if this continues to go higher, and it very well might. But this should be a long-term play for those that are investors, something that you buy, kind of like Eli Lilly. You buy it, put it in your portfolio, and then don't look at it for a while. You can see on the weekly chart just how this is what a falling knife looks like. You've heard the term "don't catch a falling knife." So lots of people thought, this is a good company. 425 is a great price. I'm going to jump in there. And then it went down here to 300. And they said, oh, I'm going to jump in here. And then finally it went down to 250. So there's no way to know whether this is actually when it's going to start to climb back up again. Momentum is starting to move higher. Even with all this downtrend right here, you notice momentum has been climbing. So even as people are selling off, that means Wall Street is accumulating into this big sell-off because momentum is starting to move higher. So all of this is an indication that United Healthcare might actually be a good place to get in. It does not guarantee it, certainly. So for those that would like to take that chance and maybe are saying, what would Warren Buffett do? This is probably the kind of stock, well, I guess we'll know next quarter when he announces his purchases, but this is probably the kind of thing that Warren Buffett likes to look for, this kind of big, huge sell-off in United Healthcare. So thanks for a couple of people that asked me about this one. I encourage anyone else, if you have something that you want me to look at or do some research on, put it in the comments, and I'd be happy to do that for you. So United Healthcare looks really super interesting. All right, that's where we are for today. Uh, we'll see what happens next week. I will be updating all of the charts for the week tonight and tomorrow, but most everything else has been updated already. So you can take it, in fact, including, we go back to the home page. I'll just look at these few. On the new Dow theory, we'll look at the Dow versus transportation. And you can see that Dow theory says if the Dow is going higher, then transportation should also be going higher. And you can see here they look almost identical. It's exactly what's going on. And then this is was theorized by Charles Dow back in 1900, so 125 years ago, and it still holds up today. But we have a different market today, so we can look at the NASDAQ versus equal weighted S&P, equal weighted NASDAQ, and equal weighted S&P. They should also be going up together, and they certainly are. Now, they are getting extended, but it does not mean they can't continue to go higher and get even more extended. The other one is the NASDAQ versus semiconductors. So semi should lead the NASDAQ higher. And that looks pretty similar. They look the same. You can see what it looked like back here in February when the market started to roll over. These were going higher. All of these that I've showed you, I've got arrows on there. So the equal weight was going higher in February as the S&P was going lower. Equal weight NASDAQ going higher as the S&P was going lower. On the NASDAQ 100 was going higher as semiconductors were going lower. And then on communication services back in February, it was going higher as the internet industry group was going lower. So right now, the communication services is sitting right up here and a nice day, nice hammer candle, ended near the high, while the internet group has a spinning top or indecision. So it's not sure which way it wants to go yet. You can see all of these are getting close to, but are not yet at the 3x ATR. That is the extreme level, usually where things reverse when it gets to that extreme, that 3x level. It's usually where it reverses or just goes sideways for a while. It is getting close to that. I mean, that could be the next 9 trading days, could get us there or somewhere within those 9 trading days. We shall see. If I go back to semiconductor and look at that too. Now this is both the NASDAQ 100 and semiconductors are already at the 3x level. So that is a danger signal. Doesn't mean it can't stay up there and continue for a little while, but the next week, probably into the end of May, same thing with the equal weight over here. Equal weight NASDAQ is sitting right there, just a little above it. The S&P is sitting right at it, getting right to it. And then if we go back again and look at the Dow theory with transportation, in this case, transportation and both, the Dow is below that extreme level and transportation is below it as well. So all of this is implying that the market is very bullish, still going higher, and probably still has a little bit more of the run left into the end of May. So we've got 9 more trading days, and then we'll see what happens. It's worth exercising some caution. If you have profits in your portfolios, it might be a time to start taking some of those profits, or at least moving your stops up, making them much tighter. But it wouldn't be a bad time to start taking those profits into the end of May. All right, that's it for now. Thanks for watching. I hope everyone will have a great weekend. And we'll pick this up again next week. And stay tuned for my newsletter for those that are interested on my website. Right here is the newsletter. So you can get a free version of the newsletter just by clicking on that. And my YouTube channel that you're on right now is up here. So you just click on the newsletter box and it will bring up, this is last week's newsletter. So it starts off with some cartoons and then it goes into my perspective on what happened in the market that week and some things that are coming up. So very interesting stuff, I think, and hopefully you'll enjoy it. There's no charge for that, of course. So anyway, have a great weekend. I will talk to you again next week, and stay safe, everyone. Take care.